Yo guys, welcome back with me Kenwilboy. In this video, I'm going to show you the best Forex trading strategy in 2025. This is the best strategy for beginners. Okay, let's begin. So this strategy involves using candlestick patterns. Well, there is pro and cons with candlestick patterns, and some people like it, others don't. But let me tell you, candlestick pattern is a really good strategy to be combined with other strategy. Candlestick pattern by itself, it's already good enough, well, there is no strategy with 100% accuracy, but it's well above 50%. Candlestick pattern really helps to determine your entry price, your entry. Is it a good entry? Is it a time for entry? Is it time to close your position? It's a good thing, to make your entries more specific, your entries more accurate, more precise. But candlestick patterns by itself are normally used by combining with other strategy, like maybe support and resistance. For example, I would like to trade, or someone likes to trade using support and resistance. Sometimes when it touches the support or the resistance, it's a good time to buy, but when is the perfect time? So you trim it down again from, for example, from a 30 minutes period, you trim it down again to the 1 minute period, so you can get the most precise entry price or entry range. Okay, if you don't know me, my name is Kenwilboy. I'm the founder of Fortunomarkets, the best broker in the world. And I'm also a professional trader with over 10 years of trading experience across multiple markets. So if you don't know candlestick patterns, here is candlestick patterns. I will show you. This is basically it. You might have seen it. You might heard about it. Well, it's pretty popular. It has been used for years by traders for years, maybe tens of years. And there are three types of candlestick patterns: the one candle patterns, the two candle patterns, and the three candlestick patterns. It might look overwhelming for you beginners, but let me tell you, you don't need to memorize all these jargons, these names. Well, if me, I remember most of it. Even me myself, I don't remember everything. I just remember the important one. I will show you which candlestick patterns are mostly used by professional traders out there. But before I tell you, oh, use this candlestick pattern, use this pattern, use that, I will show you how candlestick work first in the first place. It's a good thing for you to learn how to read candle before you learn how to read candlestick patterns. Because, of course, candlestick shapes or this basic candlestick shape is the building block of a candlestick pattern. So, yeah, first you need to learn the basics first, how to read candlestick here. So basically in a candlestick there are what we call wicks and body. Body is the square box here, either green or red. And there's what we call wick or wicks in plural. Wicks is the tail. Basically it's the line on top or the bottom. This is body, body. This is upper wick, lower wick, upper wick, lower wick. Okay, so how do you read that? In a candlestick body, in a green candlestick or bullish candlestick, the bottom of the body means the opening price. So at a given period, the price starts at the bottom body, and the top of the body is the closing price. How about for red candlestick or the bearish candlestick? Okay, it's the other way around. The opening price is the top of the box here on the top of the body, and the closing price is the bottom of the body. So what is the function of the lines here or the wicks? Well, the wicks or the lines here indicates the highest price it's ever been during that particular period. So for example, you're using a 5 minutes candlestick time frame. So one candlestick means 5 minutes, 5 minutes in real world time. During those 5 minutes, which price level or which price area is the highest price and which price is the lowest price? Okay, you can see by the shape of the candlestick, the top edge of the upper wick means that's the highest price in that particular period. And the bottom edge of the wick, of the lower wick, means that's the lowest price in that particular period. So, and it's the same thing for bullish or bearish candlestick. That's how you read candlestick, okay? Remember, the red one, the bottom of the body means open. The bottom of the body means closed. The top of the body is open. And for the green candlestick or the bullish, the bottom of the box is opening price. The top of the box is closing. And for the wick, it's the same. You don't need to twist it. Both red and green candlestick are the same. The top edge of the wick, of the upper wick, is the highest price in that period. The bottom edge of the wick is the lowest, and it's the same for the green candlestick. So that's how you read candlestick. Okay, after you know how to read candlestick, then how do you apply it to candlestick patterns? Or which candlestick pattern is the best? Okay, basically, if a market has a long wick, okay, I will show you here. So you don't need to remember any candlestick pattern. Basically, okay, this is a very good representation. If a candlestick has long wick on the bottom, like long lower wick like this here, it means it has strong buyer pressure and the price might go up. The price is more likely to go up than to go down. Well, can it go down after a candle with very long lower wick? Of course, it can, but the chances are lower. You know, trading is a game of chances. There is no such thing as 100% accuracy strategy. No, it's never like that. Trading is a game of probabilities and chances, and the job of a trader is to optimize those chances so it would benefit you as a trader. Here, in a long wick like this, with a long lower wick, it means it has a strong buying pressure. Although the candlestick color might be red like this, but it means the market might turn up. Red candlestick, it means that the price is still going down, but on the next candlestick, it might goes up. Okay? How about if a candlestick has long upper wick like this? It means in that particular moment, it has strong seller pressure. There are more sellers than buyers. And the price might go down really soon. So keep that in mind. How about if the wicks are equal, both on the upper wicks and the lower wicks? It means there is an equal amount of buying and selling pressure. So that's how you can know, is the market about to go up or about to go down? So yeah, you need to keep that in mind. Take a look at the lines. And how about if the market has only one wick, or the candlestick has only one wick, not like this. There is no, for example, there is no upper wick, just the bottom wick like this, just the lower wick. It means in that particular moment, there is a very, very strong buying pressure. And there is a few sellers, more buyers. So you need to keep in mind, although the candlestick color might be red, doesn't mean the red candlestick, it means the market is in a downtrend, but it means that the downtrend would end soon. There is a very high probabilities or chance that the market is about to go up. That's basically it. If it has very long lower wick but no upper wick, just a hammer. That's what we call a hammer. How about if the candlestick has very long upper wick but no lower wick? It means there is strong selling pressure but almost no buying pressure. So be careful, the market might go down really soon. So yeah, keep that in mind. That's how you read candlestick. Basically, you read at how long the wicks are. That's very important, you know, the wicks, because it indicates the buying and the buyer and the seller's pressure. Okay, I will show you this. See this? It has very long lower wick here and very long lower wick here. It means there is a very strong buying pressure. the buyers are stronger than the sellers. How about this? This candlestick has a very long wick, upper wick, but no lower wick. It means the selling pressure is real. There is higher selling pressure than the buying pressure, or almost no buying pressure at all. This is mostly selling pressure, and the market might go down even further on the next candlestick. Okay, that's how you read candlestick in a nutshell. So let me go back again. Which candlestick is the most important? You don't need to memorize everything. What I would like for candlestick pattern normally is the engulfing. This is a very important candlestick in the two candlestick patterns here. Engulfing, bullish engulfing and bearish engulfing. Engulfing means the next candlestick is engulfing the previous candlestick. For example, in bullish engulfing, it means the green candlestick's body, not the wicks, the body, take a look at this, are engulfing the red candlestick body on the left. So it overwhelms the red candlestick. The green candlestick is much bigger, not much bigger, it's longer and bigger both on the top and the bottom than the previous red candlestick. How about bearish engulfing? It means vice versa, the opposite. The red candlestick is engulfing or overwhelms the green candlestick on the left, the previous candlestick. And maybe what I would like is this hammer. Hammer, of course, I've shown you before, right? Hammer is a very important candlestick. It signals a reversal. It's a strong reversal signals. Hammer candlestick patterns are indicated by very long lower wick with almost non-existent upper wick. And one more, shooting star. Shooting star is the opposite of hammer. It's indicated by a square or the box with a long upper wick and almost non-existent lower wick. So yeah, okay, so how do we apply it on a real chart, real market? Okay, I will show you here. Okay, I've prepared you this 5 examples. See, okay, first, this is a bullish engulfing pattern. As you can see here, the green candlestick engulfs the red candlestick on the left, or overwhelms the red candlestick on the left. Well, the bottom of the candlestick is almost equal, so it's not really, it's not a 100% bullish engulfing candlestick pattern. It's also it's also some kind of tweezer bottom or tweezer top, see, with equal level of the red and the green candlestick. See here, equal level, equal top, equal bottom. So it's like a combination of tweezer bottom combined with bullish engulfing. But here's we can see the green candlestick engulfed the red candlestick on the left. And take a look what happened with the market afterward. See, the market went up. Of course, it's not smooth. Unlike in theory, in real market, the price is always dynamic. You know, even in a very strong uptrend, it's not like straight line. This is real market, real people with real psychology. So the market, even in a very strong bullish uptrend, the market would still like zigzag a little bit. Yeah, that's what we call market. But you can see, after this candlestick, like literally after this candlestick pattern, the markets went up. Here, boom, 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 shoo, fly to the moon. Okay? Well, it went down a little bit, but still, overall, it's a very strong bullish uptrend here. Okay, check again. This is the next candlestick pattern. This is a bearish engulfing. You can see this. The red candlestick body engulfs the green candlestick body on the left. It means this is a bearish signal. It's a signal that indicates that the market is about to go down. Okay, take a look here. Boom, 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 boom. It's going down. Of course, again, a little bit zigzag, but that's normal. You know, this is what we call market. Okay, next, this, you can see this again, engulfing. Yeah, the red candlestick engulfs the green candlestick, and you can see after this candlestick pattern, the markets went down. So you could profit massively. You can make massive profits here. Well, if you're greedy and you keep on holding, the market goes back up. But if you're not greedy, you would have taken profit here. You would have close your position here or somewhere around here. You can see here there is a lot of support area. There is a lot of opportunity for you to close this trade if you open a trade here. Next, here, this is a bearish engulfing candlestick pattern again, and you can see the market went down right after this candlestick pattern. Although it's going down for a while, then it goes back up, but you can see right after this candlestick pattern, the market went down instantly right after this candlestick pattern. So candlestick pattern can be used to find your precise entry location, while support and resistance or other strategy might give you like an approximate entry area or price target, whatever. But candlestick pattern can signal you a more precise. It's used to filter out, you know, to filter out your entry area, so you got a more precise and accurate entry location or entry price. Next, here, this is also another bullish, bearish engulfing pattern. As you can see, right after this candlestick pattern, the market went down instantly. And of course, it goes back up after quite some time, but you could have taken profit, right? Somewhere around here. You can make a massive profit. Take a look at this. Even if you close it just here, not here, just here, this is a long drop, you know. This is a long price drop. Let me calculate for you. If you open a sell position right after this candlestick pattern, take a look. Here, you could have made, wow, 10,000 points. 10,000 points, or this is $100 difference in XAUUSD or gold, or 10,000 points. It means with one lot of sell position, you could have made $10,000 of profits. Insane. Just from this slight downward movement, slight bearish downtrend. Yeah, so this is how you use candlestick pattern. Yeah, it's good to find a precise entry price or precise entry location. So keep that in mind. And it's even better if you combine candlestick patterns with other trading strategy like support or resistance or whatever. Moving average, Bollinger Bands or ICT, whatever. Yep. And always keep in mind, if you want to enter a trade, there is two types of entries. One is the low risk, one is the high risk. The low risk one, you use stop loss, you use low lot sizes, like I would recommend 0.01 lots for every $100 in your trading account balance. But also there is another type of traders who would go full margin and go all in, but you only deposit the money you can afford to lose in that particular full margin account or the war account. I would call it war account. And yeah, if you want to do full margin, all in method, the best broker for you to do it, and not only full margin, if you want to do low risk trade, also you can manage your risk using stop loss, low lot sizes, and the best broker I would use is fortunomarkets. They offer up to unlimited leverage, amazing, insane, one of the highest leverage in the world, very low spreads. This is the broker I use, of course. I think this is the safest, the best, the cheapest broker, very trusted, global reputation. It's a big broker with hundreds of thousands of traders are all around the world, more than 20 countries, and only $10 minimum deposit. If you use crypto or USDT, there is only $5 minimum deposit. It's even lower. And withdrawal is instant, no matter the amount, so you don't need to worry. Withdrawing small or big amount, it's all instant, no problem. So if you like this video, don't forget to like, subscribe, and hit the bell icon down below. Thank you for watching, and peace out.